In a world covered by endless night, in a place where fear and despair thrive, in a time when all hope seems lost, two individuals arise to stand firm, resist the darkness, and light the beacons of hope to humanity. To the free people of the future, the courage of these two will mark them as heroes. To everyone else, they will simply be known as Nobodies.
Hello everybody, thanks for tuning in to Nobodies. It's just two nobodies talk about nothing. I'm Dave, this is Brian.
Hello everyone.
And today's topic is kind of round two of the fractional reserve banking system that we did. This is taken off on an earlier video we did about the basics of fractional reserve banking, and now we want to kind of transition and kind of explain to you like why it's bad,
right?
Why the system just.
We touched on why it's bad before, because there's an Achilles heel to the system. If that bank doesn't getting its money from the people it loans out, the whole thing collapses, and you end up losing your money. But of course, this is a giant gambling game, and why do banks do this? Obviously to make money, but
lots of money.
Yeah, but they're not. They're not idiots. They know the risk involved. They just don't care. And it's not just because they're being callous about the matter. It's because they know they can get away with it. And that's what we want to focus on today is, why do they think they can get away with it? Because they can. And step one about that is the Federal Reserve. For those of you who aren't familiar with it, the Federal Reserve is a private bank that runs as the United States' central bank. And it's able to give out loans to other small banks. So let's say you go to your bank and your bank starts running out of money. Well, what do they do when they run out of money? They go call up the Federal Reserve, who has an infinite money supply because they can just print more cash, which everyone should know from basic economics is a bad thing. They just ask the Fed, hey, we need more money. So the Fed loans them more money. Sort of like when someone's got a gambling addiction and you just end up giving them more money so they can keep on gambling. Obviously that's a bad thing.
Mm-hmm. Yeah, and that's the thing, is when you print more money, for people who didn't take basic econ, you print more money, you dilute the money that you have, so you're actually lowering your standard of living, your purchasing power. And the Fed, I mean, to quote Ben Bernanke, they don't literally print money. When Ron Paul was questioning him, I don't know, did you ever see that?
Yes, I did.
It was so good. They don't literally do it, it's all digital, but the effect is still the same. When you dilute the money supply, your standard of living goes down. And I'd like for everybody to keep that in mind, especially nowadays when we're talking about, in the current zeitgeist of things, people are talking about wealth inequality, how hard it is to get by, the cost of housing, I mean everything. You think about, how expensive things are nowadays. Just keep that in mind about, how far your dollar goes. Kind of tangent, but anyway.
Everyone hears the joke about, of someone who's really older saying, well, back in my day, gum used to cost a nickel. Well, sure. Why doesn't it cost a nickel anymore? Because our money supply has gotten completely inflated because the Feds keep printing money.
Exactly, and I mean, when you go to school, I mean, when I was in high school and they talk about econ, they make it sound like, oh, that's because your standard of living has gone up, and that's not true. Your standard of living has actually gone down, and I really think that people are starting to feel the effects of that, and it's terrible. It sucks. I think we all feel it. So,
yeah.
Anyway, basic econ, when you print money, it dilutes the money, it's worth less. So anyway, but fractional reserve banking.
Yep, so your bank is having a terrible gambling problem because it's trying to make money, and it's run out. So it goes as the Fed, who ends up printing more money in order to continue its little gambling addiction. But, of course, the Feds loan money out, which means those banks still got to pay them back. So what happens when, your bank doesn't have enough money to even pay the Feds back, and it can't even pay you back? What's the next step?
Another loan! Hey, get another one.
Yep, and that's how it keeps going. You just get another loan, and you get another loan, and pretty much you have so much debt that you get the massive bubble that we had back in 2008. And when that whole thing collapses, then what happens? Bailout. Wonderful, wonderful bailout. I can assure you that no bank was losing sleep over the fact of whether or not they'd end up getting a bailout. And that's really what it comes down to is the banks make these risky loans because they know they can get away with it, because they know at the end of the day they will be getting a bailout no matter what. Because, the economy is, the banks are too big to fail. And that mentality is exactly why the bubble happens and why it bursts and why we suffer for it. You know, the best analogy I could come up with is, say that you got $1 million, and I say, if you go to Vegas and gamble every single cent away, I'll just give you $1 million more. What are you gonna do with that $1 million?
What would you do?
You're gonna gamble it all away because it's a win-win situation. Either you win tons of money, or I just hit the reset button and you get what you started with. That's what bailouts do.
That's pretty much exactly what's going on, you know. And you know, like 2008, like you just said, banks were making just horrible loans. You know, loans that should never have been made, and they knew they were going to get bailed out. And here's the thing. This isn't the first time this has happened. I know a lot of people think that this is the first time it's happened. It is not. The government has bailed out banks several times, and it's bailed out auto companies.
GM.
It was, well, GM, I don't want to put my foot in my mouth. I'm going to look it up. But back in the early, I want to say it was 70s or something, I think Chrysler got a bailout.
Actually, wait, yeah, you're right. Chrysler, that is definitely.
I think it was Chrysler.
Yes.
Let me look it up. But the point is, the government has been bailing out industries and institutions for since its beginning almost. And like you said, the point is, people know they're going to get a bailout, so they're going to go and do whatever.
At your expense.
At your expense. At our expense.
Yes, because think about it. I mean, where does the government get the money for bailout? It's gonna either A, tax the crap out of you, which definitely doesn't help you, or B, where does it get its money from? The Federal Reserve. And where does it get its money from? Printing money. No matter what happens, we end up losing. And this kind of touches in what I was trying to build up, like in the previous episode. Like when people talk about like banks are the problem, yes, sort of, but they're able to get away with it because of government. So the solution is not because, I mean, the problem is not really free market capitalism. It's that government policies are enabling, encouraging, and incentivizing the banks to do all of this. I mean, if those incentives weren't there, any bank that really did care about its money supply wouldn't be making these risks because they're greedy and they want to keep their money, right? I mean, that's what everyone wants to do. So why would they make this risks unless there was an incentive to do it? And the government has given them an incentive through the Federal Reserve and through bailouts.
1979, Chrysler. So, yeah, bailouts, man. So, and the, man. I'm very upset right now. What do, you know? The whole system is designed upon fractional reserve banking, the idea that you can have one bank, the Federal Reserve, and the thing is, everybody rants and raves about monopolies, you know, especially liberals talk about monopolies. Monopolies are so bad. The Federal Reserve is a monopoly. They have a monopoly on our money supply. They can print and take away as they feel, you know, and like you said, they're private. They don't care.
Yeah.
They're private. So
don't let the federal partner trick you. It's not a federal bank.
Federal in name only. So yeah, the whole system's unstable. I mean, eventually something's got to give, as was, you know, 2008 showed us all. And some people think a bigger one's coming. I don't know, but it can't keep going on.
Yeah, so we hear about, like, you know, Occupy Wall Street talking about evil banks, and Bernie Sanders talking about evil banks.
I got excited about Occupy. I'm not gonna lie. For the first like month, I heard about these people protesting the bailouts and the banks. I got excited. I legit got excited, and I shouldn't have done that. I got my hopes up. I shouldn't have done that. Yeah.
Because they were putting the target on the wrong thing. They were asking for more government regulation and bank nationalization. Government's already in bed with the Federal Reserve and with banks in general, so that's the problem. It's because government enables the banks that they end up screwing us over. It's not because of greedy capitalism.
Think about it. Where do these banks get their charters from? Where does the Fed get its charter to do business from? The government. So we want more government. Oh, we're going to regulate the banks. Really? Really? Millions of dollars at stake here. You think politicians are going to do something about it? How many politicians leave being millionaires? Barack Obama. Okay, I'm going to pick on that guy for a second. You know he's leaving the White House. He's going to move into this mansion or whatever. That the rent is $22,000 a month. Who makes that? I don't even make that. Do you? You don't make that. I know you don't make that. Don't lie to me. You don't make that. Who makes that? And that's his rent. That's just a rent. What about his driving and utilities and food? What does that guy eat? Lobster? I don't know. Jeez. Anyway, it's the Fed.
Yeah.
Fed and government getting together, getting in bed, Making money, babies. This pisses me off. It really does.
We're getting a little sidetracked, I think.
Yes, we are. I'm sorry.
But
this is my fault. My fault.
The main thesis here is that, you know, yes, they're being greedy, and I guess that's not necessarily the spirit of capitalism, but you want to call it that, sure. But it isn't really free market capitalism. It's crony capitalism.
It's not.
Because when government gets involved with business, that's crony capitalism. And when we're talking about free market capitalism, completely different concept. We don't want government involved because government helps create monopolies, just like it does with the Federal Reserve. Mm-hmm. And that's the issue that's at stake here. So the issue is not more government, because government's already involved. And they're not going to bite the hand that feeds them. Like he was trying to get at, you know, the banks have a lot of money in this. Trust me, there's going to be plenty of loopholes, and there always will be loopholes. And as righteous as Bernie Sanders one sounds like, and if he even gets elected, I mean, come on, he's going to eventually get replaced by somebody else, and the whole thing's just going to go back the way it is. The best that we can do is try to make sure government doesn't get its paws into business to begin with, because that's the only reason that these companies, these banks, make these decisions, is because then they can get away with it because they got politicians backing them with their policies.
Mm-hmm. So yeah, I mean, and it all centers around fractional reserve banking, the idea that you can print money, you know, you take $10 and you loan out 9, and then they loan out 9 of that, and or 8 of that, you know, it slowly dwindles down, and it enables this entire system that we have, which really hurts everybody. It hurts working class families, it hurts small business owners. I mean, really, the only people that benefit from fractional reserve banking is exactly what we were talking about a second ago, was, you know, politicians and large banks and CEOs and stuff, because they're the people that, you know, that benefit from the system. So we really need a change. I'd like to see a change. You know, obviously the next question is, what would we replace it with? I think we go to sound banking. You know, we could do a gold-backed currency, which is the leading libertarian thought. Yeah. Where the money's backed by gold. So if you try to print more money, you know, yeah, the supply would be diluted or whatever, but the gold would be worth the same technically versus right now, you know, it's on the market. So
well, there's also the theory about competing currencies. Do you want to touch on that?
Yeah, real quick. I mean, because, you know, we talked about the problem. Yeah. You know, I like to give solutions, or try to.
Yeah, so take out a dollar bill. What does it say? Federal Reserve note. This thing comes from the Federal Reserve, which is a private bank, right? In theory, if we get rid of the Federal Reserve and we decentralize our money supply, we could have different currencies made by different banks, which so maybe could be backed by gold, maybe they're backed by something else, maybe not backed at all. We have different currencies competing with each other, sort of like Bitcoin in a way, like in theory, but there's an alternative currency that we could use. And, you know, whichever was the strongest one in the marketplace, people are going to go flock to that. Mm-hmm. And people are, you know, if we start using better currencies that are stronger currencies that don't get hit by inflation, we're going to be better off with that because you're going to have more bang for your buck. So that's also another theory that some have. It's not just have like a national dollar, but we have competing currencies. Personally, I don't know where I stand on that. I'm kind of, I think about it, but I'm not quite sure yet, but I think it would be at least nicer than what we have now.
I'm more of a competing currencies guy. I think every bank should be able to mint their own currency. And I can already hear the complaints, you know, it'd be crazy. Yes, it would be crazy, but there'd be a lot of opportunity there to make money. Yeah. You know, just by exchanging, you know, bank dollars, people, you know, profiteering or whatever you want to call it. You know, there'd be day traders who would just exchange bank currencies. I really think that would be a huge economic opportunity for people to just have the currency. And it would also make people pay attention. You know, I know, especially nowadays, you know, things are so crazy. Nobody wants to pay attention to your bank, but you know, I really think people would pay attention to their bank more. You know, is my bank going to go under? You know, should I go with XYZ Bank instead because they're more solid and their reserves are bigger? You know, and with competing currencies, you could have that. And like you said, some might be backed by gold. Some banks, you might be able to go up, waltz in, hand them a dollar bill, and they'd melt the mint right there for you, and you'd walk out with your coins. Some of them might just be paper-backed. I mean, who knows? I'd be excited to see it. But I think it's just my opinion, you know. Like you said, you're on the fence. I'd like to see something decentralized. Because, I mean, you look at the whole nation, the nation as a whole, I'm repeating myself, you know, like Zimbabwe. You have one national currency. What happens when it fails? You're screwed. And I know the thought of the U.S. dollar becoming worthless is, you know, sounds crazy. And maybe it is a little far-fetched, but, I mean, better safe than sorry, right?
Yeah.
You know, versus if one bank goes out, You know, it might get bought out by another bank, and they do a little switcheroo, and exchange your dollars for their bank dollars, maybe give you a good rate. Who knows? I'm not going to tell you that I know, because I don't, but I have a guess, and that would be my guess. It's just, that's what would happen. And I think it'd be cool.
Yeah. Theoretically, I mean, it'll at least be... they'll still be preferable than we have now, because, if X dollar decides to plummet in value, there are other options that you could go to.
And that's the thing, you'd have options. Right now, it's the US dollar. You don't have options, I like options.
I mean, there is Bitcoin, but no one takes that.
No one takes that. Yeah. So, yeah, just my thoughts on a solution to this big problem. And the Fed.
Yeah, and the Fed, and government incentives for fractional reserve banking, and things would be better. You don't tell the government to get more power, to put its hands more further into banks, because that's not going to work in the end.
Then that brings up another thing, in my little world or whatever, all the banks would be pretty small. I mean, there probably would be big banks, but they wouldn't be nearly what they are now. And they wouldn't get government bailouts because the government wouldn't have that capacity. There would be no Federal Reserve. So if a bank goes under, you need to find somebody to buy you out, or you're just going to go under. You pay out your shareholders and have a nice day. So, it would suck for the people that were in that bank. Don't get me wrong, but it would be very, very localized. It wouldn't be on this national scale. So, and like I said, you would have to pay attention to your bank. You would need to actually go to your bank, attend the meetings, how are we doing financially, and that's going to take some time. Versus now, who cares about their bank? Let's be honest. I don't think about my bank. Nobody does. So there's a convenience there, but I think that's a disservice.
Because that creates complacency, and then that's going to have costs, which we have seen.
It's already happened.
Yeah.
So. Alrighty.
Well, that's all I've got. Anything else?
That's all you got? Yeah, that's all I got. I'm not going to call them the golden silver bullet or whatever. Fractional reserve banking is a problem, and I really think it needs to be addressed. And we talk about it, especially, like you said, in libertarian circles, and even a lot of conservatives talk about it nowadays. It's kind of caught on. But I'd like to see a more national conversation about fractional reserve banking, and just the Fed in general,
Yeah.
So, if you Google this, after you watch this video, if you Google the Fed and fractional reserve banking, I will say that I've done a job well done, and I'll feel happy. So, do that for me.
Alright, on that note, thank you for watching if you did, and we'll see you next time.
Alright, thanks for watching, and see you later.